Hello, hi to everyone. Namaskar to all the viewers of this channel, my dear students. As we are already into the depreciation chapter, right? It's a very simple chapter, but we have some little bit difficult problem in the later stages. Okay. Please remember, my dear student, for every video classes in description box, I put the question in PDF form and also the solution to that particular question in PDF form. You can go through that link, you can utilize it, even you can take the printout of it also. See what happened in this particular problem. We are solving the problems on depreciation without provision for depreciation. We are into which type of problem? Without provision for depreciation. Means we are not opening any provision for depreciation. Directly we are solving through machinery account. See what happened. On 1st July 2015, Vijaya Limited purchased a second hand machine. What machine it is? M1 machine. Sir, it is a second hand machine. Na? Please put M2. Waisa nahi bolna. Second hand or first hand. We have purchased it, right? For us, it is a machine 1. For rupees what? 20,000 and spent 3,000 on reconditioning and installing. What to do this 3,000? We have to add that 3,000 to 20,000. So कुल मिला के कितना हुआ value of the first machinery? It comes to rupees 23,000. Am I right? On January 2016, the firm purchased a new machine, that is M2 is purchased. For rupees what? 12,000 rupees. Fine. On 30th June 2017, machinery purchased on January 16. What machine? The machinery which was purchased on January 16. See, the machinery which was purchased on January 16 means it is what kind of machine? That is the first machine. What machine it is? It is the first machine. The first machine is being what? Sold. What they have done? Sold. Which machine is sold? Now we can say that M1 sold for an amount of rupees 8,000. Fine. What happened next? On 1st July 2017, a fresh machinery, on 1st July 2017, the fresh machinery was purchased. What machine it is? That is, they purchased M3 machine. The payment for this machinery, see how the payment is made. The payment is made on 1st July 2017, 5,000 rupees. See, when it is purchased, or purchased on July 17. When it is purchased, July 17. See, they paid on July 17. This is nothing but we can call it as down payment. You heard of DP, right? Down payment. Whenever we purchased a scooter or a car, the showroom owner is asking for down payment. That is what they paid. Then, on 30th June 2018, means exactly after 1 year, they paid 6,000. On 30th June 2019, they paid 5,500. Okay. The payment of 2018 and 19 include the interest. Oh, Bapre, you paid the first installment, right? 6,000. In that 6,000, what is the amount of interest? Amount of interest is 1,000. Out of 6,000, you subtract 1,000. You are getting 5,000. This is called the principal. Right? Installment includes your principal amount and the interest amount. See, then 2019 it is 500. Out of 5,500, you subtract 500. We are getting 5,000 as a principal. See, here you paid down payment 5,000. This down payment is also principal. How much principal you paid? 3 principal, right? That is 15,000 is the cost of M3. I repeat my question. Please, my dear children, listen here. On July 17, fresh machinery was purchased on installment basis. How you purchased? Installment. Whenever we purchased a bike or a car, we used to make the payment of money monthly installment, right? In monthly installment, for example, if you paid a monthly installment of 40,000, in that 40,000, 12,000 is your interest. Then what is your principal repayment? 40,000 में 12,000 निकालो, कितना आता? 28,000 आता. The 28,000, my dear children, is called principal repayment. Similarly, what happened here? On July 17, you paid 5,000, which is nothing but a down payment. Down payment is a principal. In 2018, you paid 6,000. Out of 6,000, 1,000 is your interest, kirai. That is baddi, right? Kannadadalli baddi. English kirai, mean Hindi kirai. Interest, we call it as English. That interest is to be subtracted. We are getting principal of 5,000. Okay, fine. On 30th June 19, you paid 5,500. In that 500 is your interest. वो interest subtract किया तो कितना आता? 5,000 आता. कुल मिला के this is your 3 payments. That is your cash price of M3. Fine. The company write off depreciation at 10% on the original cost method. Oh bapre, 10% कौन सा method? Original cost method. Original cost method means OCM. It is also known as SLM. OCM means original cost method. SLM means straight line method. Okay. Accounts are closed on 31st March every year. Accounts are closed on 31st March every year. Closing date is also given. What we have to do? See, what we have to do? Show the machinery account. Show what? What we have to show? Show the machinery account for how many years? We have to show the machinery account for 3 years. How many years we have to show? We have to show the machinery account for 3 years. Shall we do the solution for this particular problem? Fine. Let us have the presentation. First, how to make the presentation, my dear children? First, you remember depreciation is 10% under OCM method. Okay, depreciation is 10% OCM method. Closing date. When the accounts are closed? 31st March every year. Now you get ready with format. How many machines you purchased? We purchased 3 machines, M1, M2, M3. Have a concentration, my dear children, regarding what happened. See, what happened here on 1st July 2015, the second hand machine is purchased, 20,000 cost, 3,000 installment. Put together how much? 23,000. On what date it is? On what date they purchase? 1st July 15. Here I will write. First, M1 is purchased on 1st July 15 for an amount of rupees 20,000 plus 3,000. So it is of rupees 23,000. Fine. What happened next? See what happened in the next stage. On January 2016, when? On January 2016, on the new machinery. What is that machinery? M2, right? The new machinery M2 is being purchased. When they purchased? On 1st January 2016, the new machinery M2 is purchased for an amount of rupees 12,000. January 2016. M2, 1st January 2016. Which machine that they purchased? M2 is purchased for an amount of rupees 12,000. Fine. What happened in the next stage? On 30th June 2017, machinery purchased on January 16 is sold. Which machine is sold? M2 is sold. On what date? On what date? On 30th June 2017. On what date? This machinery. sold on 30th June 2017 for an amount of rupees how much? For an amount of rupees 8,000. On July 17, fresh machinery purchased. When? M3. When they purchased? 1st July 2017. For what amount? We have calculated the amount. The cost of the third machine is how much? 15,000 rupees. This is what the third machine is purchased. Fine. What happened? Payment. Okay, fine. Company rate of depreciation 10% on original cost method. Fine. Shall we move on to solution? See, this is the first date, right? I am supposed to write the first date, 1st July 2017, mean 15 as a cost. Fine. When it is sold? June 17. Until then, no entry. Here it closes on 31st March 2016. Depreciation is what percent? 10% under what method? Under OCM method. Please remember it is OCM method. M1 means M1 purchased on July 15. M2 purchased on January 16. So both the machines are purchased in the first year only. For M1 it is of how many months? July to, instead of writing this, M1 purchased on 1st July to 31st March, means July, August, September, October, November, December, January, February, March. How many months it comes? It comes to 9 months. M2, it is purchased on 1st January. We are closing on 31st March. It is of 3 months. My dear children, we are into OCM method, right? 23,000 into 10% into 9 by 12 for M1. Okay. For M2, what we have to do? For M2, we have to write 12,000 into 10% into 3 by 12. See how much we are getting for the first machine. It comes to rupees 1,725. So let us write 1,725. For M2 it comes to rupees 300. M3 no, because M3 is purchased on when? July 17. Now my dear student, you close it off. Now what I should write? I am supposed to write the next date. The next date is on 1st April 16. Let me write the balance. Out of 23, subtract 1,725, it comes to rupees 21,275. Okay. Here it comes to 11,700. The third machine remain the same as rupees 15,000. Now, it is on April 16, right? The closing date is on 31st March 17. Here sold on June 17, means in the next financial year. What to write? Depreciation 10% OCM. Okay. Now M1. What is the OCM of M1? 23,000. Please remember OCM of M1 is 23,000. Into what percent? 10%. It is for full 1 year, right? Because it becomes a old machinery. So you can do it for 1 year. Means 12 months by 12 months. For M2. M2 is what? Original cost is 12,000 into 10%. That is also old machine 12 by 12. It comes what? 2,300, 1,200 dash. Now let me write the balance. The balance comes on what date? The balance comes on 1st April 2017. I write the balance. Balance is how much? It comes to 18,975. This one comes to 10,500. The last machine is 15,000. Okay. Let me move on to the next one, my dear students. What? Continue with the table. 3 machines, right? Now, What happened in earlier? We completed April 17, right? In the June 17, M2 is sold. Which machine is sold? M2 is sold. When? June 17, 30th June 17. 30th June 17, which machine is sold? M2 sold. Right? What is the time gap? April, May, June. Depreciation on M2 for 3 months. Under what method? Under OCM method. What is the original cost of the second machine? 12,000 rupees. So you take 12,000, 10%, 3 by 12. It comes how much? First machine dash, second machine 300. Now M2 sold. See my dear children, M2 is sold for how much? M2 is sold for 8,000 rupees. Now you work out a balance. How to work out a balance? Take 10,500, please use a calci, 10,500, subtract 300, subtract 8,000. It comes to rupees 2,200 as a positive. I told you now, positive means it is nothing but loss. What it is called? Loss. Opposite. Actually we have to subtract sold minus book value. But what we are doing? We are subtracting book value minus sold. That's why your answer is reversed. Fine. That completes your second machine, right? Then what happened? You purchased the third machine on July 17. Am I right? Now, we are into 30th June 17. You go for last date. What is the last date? That is 31st March 2018. Depreciation 10% OCM. My dear children, how many machines are left out? This is available with you. This is also available with you. And you purchased recently in July 17. When you purchased? July 17. So let me write. M1 12 months. M3 1st July to 31st March. July, August, September, October, November, December, January, February, March. How many months it comes? It comes to 9 months. How to work out? The original cost of the first machine is 23,000 into 10% into 12 by 12 for 12 months. For M3 machine, M3 machine is purchased for how much? 15,000 as a original cost. 10%. It comes how many months? 9 months as a 9 by 12. Use a calcium, my dear children. It comes to rupees, for first machine, it comes to 2,300. No depreciation for second machine because second machine is sold. Now when it comes to third machine, 15,000, 10% into 9 by 12. It comes to rupees 1125. Now we have to write the balance. The balance is to be written on what date? On 1st April 18. We have to write the balance. How much balance? See, out of 18,975, subtract 2,300. It comes to 16,675. M2 is so dash. For M3, out of 15,000, you subtract 1125. It comes to rupees 13,875. Now the working is completed. Now what we have to do? We have to prepare the machinery account. Machinery account for how many years? 3 years. So now let us write. Machinery account for how many years? Machinery account for how many years? For 3 years. Now you get ready with machinery account. For 3 years, right? Write date, particulars, debit, credit. Okay. Now let us start the solution, my dear student. When you people purchase the first machine purchased on July 15 for an amount of 23,000. When it is purchased? 1st July 15. To bank, which machine is purchased? M1. Purchased for how much? 23,000. Similarly, my dear student, in the same year, on January 16, M2 is purchased for 12,000. It also comes in the same financial year, right? Now, on 1st June 16, what? On 1st January 16, to bank, which machine is purchased? M2 for an amount of 12,000. Fine. At the end of the year, that is 31st March 16, what we have to calculate? We have to calculate the depreciation. See, what was the depreciation you calculated? Put together both 1725 and 300. It comes to rupees 2025. Am I right? We have to take 2025. Put a dot for the date. By balance carry down. Work out the total comes to 35,000. The total comes to 35,000 minus 2025, it comes to rupees 32,975. Usually what I will do, after 1 year I close complete, because we should not get any confusions in the second year. Fine. When you come to second year, I am supposed to write, closed on 31st March 16, right? It starts on April 16. What I should write? To balance brought down the same amount of 32,975. Fine. What happened in the next year? In the next year, March 17, we have calculated only depreciation. The total depreciation of these two, 2,300 plus 1,200, it comes to rupees 3,500 on 31st March 17. By depreciation account, the depreciation on both the machines comes to 3,500. Put the dot for the dates. By balance carried on. Take the calci, 32,975 minus 3,500. It comes to rupees 9,475. Total is 32,975. 32,975. Close completely in second year also. Let us move on to the third year. Third year is on what? 1st April 17, right? March 17 close, April 17 open. To balance brought down. Kitna hai udhar? 29,475. See, so many things happened in the third year, right? What happened in the third year? In the third year, on 30th June 17, M2 is sold. When you sold, you got three things. One is depreciation, another is a sold value, and one more is loss value. All the three comes in what side? All the three comes on the credit side of your machinery account. On what date? 30th June 17. So let us write on 30th June 17. By depreciation, by bank, M2 sold, by profit and loss as a loss. See, what was the depreciation? 300. Sold for 8,000. What was the loss? 2200. 2200 is the loss when you people sold the M2. Fine. What happened in the last? Next case. What happened? You have purchased this M2, right? On when? On July 17. On 1st July 17, we have to write to bank as a M3 purchased. M3 purchased for how much? An amount of rupees 15,000. Let us write 15,000. Okay, you purchased M3 also. Then, what happened as per the working out? Lastly, on March 18, we put a depreciation. Depreciation on what? Depreciation on M1 and a depreciation on M3. You work out a total. That total is to be written here. On 31st March 18, by depreciation account, my dear children, you work out both the depreciation, 2,300, 1,125. It comes to 3,425. Am I right? Now we have to write the same date. By balance, carry down. You work out the total. The total comes to 44,475. You subtract all these things, you are getting a carry down of 30,550. 44,475. Then ultimately what we have to do? Ultimately we have to write 1st April 18 to balance brought down, it is 30,550. My dear students, did you understood how to work out a problem on depreciation? It's a very important chapter, my dear student. Try to understand. Here 3 machines are purchased and 1 machine is sold. Okay, this is how we have to solve the problem in particular depreciation chapter. Please go through it, practice it, put efforts in your own way. Okay, all the best, my dear student. Have a bright future. Prepare well for your forthcoming September exam. Thank you. Take care. Bye-bye.